All right. Good morning, all you magnificent melonheads. 9 a.m. is here. Happy Wednesday, everybody. Today is August 23rd, 2023. Big story this morning. Chinese President Xi Jinping. He was a no-show at one of the opening ceremonies of the BRICS Summit. I've heard a lot of talk about this BRICS Summit. A lot of people are saying, oh boy, they're going to roll out their new BRICS currency and the world is going back on the gold standard, or at least half of the world. I mean, gold bugs, silver stackers out there. There's a lot of hype around this BRICS Summit. All right. And everybody wants to see it. Oh my God, half the world going back on the gold standard would create all this demand for gold. It's the end of the dollar as we know it. I've always been skeptical of this. De-dollarizing is, I've used the analogy of the kid that wants to move out of his home, the teenager who wants to be out on his own, stand on his own 2 feet. Sounds great. I want to move away from mom and dad and be able to do everything myself. Easier said than done. De-dollarizing is no different. All right, divorcing from the world reserve currency is not so easily done as a lot of the BRICS countries are finding out right now. So there's a lot of hype around this BRICS summit right now. A lot of people are hoping that there's some announcement of this new BRICS currency and that it's going to expedite the de-dollarization. There's a lot of speculation that it's going to be backed by some basket of commodities. There's speculation it might be backed by gold. We had that very weird tweet from the Russian embassy, and I think it was in Kenya, saying that a new gold-backed currency is coming, as if an announcement like that would be made through an obscure embassy in Kenya. But it's not off to such a good start. Xi Jinping was scheduled to give remarks at this economic summit at the beginning of the BRICS Annual Summit yesterday, and he didn't show up. No offer, no explanation was given. Instead, he sent his commerce minister, who gave some pre-prepared remarks from Xi Jinping. He read the remarks, and then that was it. No explanation. Nobody knows why. Now, hey, look, Xi Jinping, president of China, right? 1.4 billion people in China. I'm sure the demands on his time are many, but this is kind of an important event. If you're trying to build this global economic alliance for the purpose of breaking U.S. hegemony, you got to show up. But we don't know why he didn't show up. And so people are just speculating. And I don't want to speculate too much. Every now and then I speculate on the channel, but I'm curious what you guys think. Why was Xi Jinping a no-show here? Give me your ideas as to why. I'll take everything from nutty to empirical data supported. What was Xi doing that was so important that he skipped out on the opening ceremonies of the BRICS Summit? Now, I also want to add, it's not like he just didn't go to the summit at all, because Xi Jinping did show up later last night at a dinner that was hosted by South African President Ramaphosa. Am I saying that right, or Ramaphosa? So Xi is there. He just wasn't at this event where he was supposed to give the keynote speech, a speech about the resilience of the Chinese economy, which data shows is really anything but resilient. And with that, let's shrink my big melon of a head and see what's going on in markets this morning. And while we're shrinking my melon of a head, won't you guys please smash that like button? It really helps me with the YouTube algorithm. And if you're new to the channel, won't you please stay a while? We do this every day. I'd love to see you back here tomorrow morning. Right now, the S&P is scheduled to open about 7 points higher, flat on the day, up 0.15%. We've got the Dow is scheduled to open about 34 points higher, or 0.1%. Pretty much flat day for the Dow and the S&P. And the NASDAQ, my charts are a little messy this morning. The NASDAQ up 41 points pre-market, a little over 0.25%. So NASDAQ leading the way higher this morning. Keep an eye on those Nvidia earnings. We'll talk about that in a minute. I think the market is holding their breath right now because of Nvidia. We'll talk about that in a little bit more detail. Check this one out, guys. Last night, the DXY, the US dollar index. Whoa, big move, up 41 basis points right now. The Dixie is pushing 104. We blew through the 103s in a matter of days. And obviously, if you're looking at this chart right now, you're looking right here and saying, whoa, what was this right here? 3:30 a.m. Eastern time. While I was sleeping, I'm sure most of you were sleeping at that time too. Well, we got a couple guys on the other side of the pond here. This was when the UK's composite PMI was released. At 3:30 a.m., there was a disappointing PMI number came out of Great Britain. And it shows that both services and manufacturing are in steep decline in UK. And not only are they in decline, but the decline is accelerating. It's dropping, and it's dropping faster than it's been dropping. And that's 4 or 5 consecutive months of that. So these higher interest rates are causing big problems in the UK. And now it's starting to weaken the British pound. And as soon as this data came out, the pound instantly weakened, and that sent the DXY higher. So keep an eye on Europe, guys. I mean, China's getting all the attention, and banks are getting all the attention in the U.S. Let's not forget that there's economic calamity in Europe right now, and it's like there's this three-way race to see who can screw up the whole world economy first. Will it be the U.S.? Will it be the U.K.? Will it be Great Britain or China? Let me know in the comments. Who do you think is going to do it first? My money's on China. Right now, my money's on China. I think things are that bad there. But again, let's not discount the U.S.'s ability to screw up the global economy. They've done it. We've done it before. And just checking out the DXY, guys, this is the 200-day moving average right here shown in red. We broke above that. We talked about it yesterday. Big move higher right now. Unless Japan gets involved soon, the DXY is going to continue rolling, especially now if the pound is weakening. So keep an eye on that DXY chart. This chart moving higher is putting downward pressure on stocks. And the bond market right now, we got yields are mostly lower this morning. The 30-year, 4.35%. That's down about 7 basis points. The 10-year's taking a breather today, down 6 basis points at 4.26%, just off its recent highs, but still way elevated compared to like the last 20 years or so. We've got the 2-year is over 5%, yielding 5.01. That's down about 3 bips this morning. And the 1-month remains range-bound right around 5.38. Looking over at commodities, we've got gold is liking the lower yields this morning, although it's shrugging off the higher dollar. 1,933 on December gold futures. That is up $7.35. September silver futures at 23.91. That's up 46 cents or 1.8%. So precious metals having a really good day today. Crude oil, check that out. $78.06 for October WTI futures. That's down $1.55 this morning or 1.5%. Take a look at the oil chart, guys, because here we go. We got that red candle this morning. We're down pretty big today. We broke out above this previous high from April. Here's that previous high in April. We broke above that. We came up, we retested it, failed the retest, came back down. Now look at this right here. Uh-oh, that is a golden cross. Golden cross when the 50-day moving average moves above the 200-day moving average. That is a major bullish technical indicator. Even though oil is down big right now, we have a very bullish technical indicator. So what I see happening right now as this 50-day moving average rises, we could see oil bounce around in between here. And then ultimately, either we're going to have more demand destruction, more of that chaos out of China, which would send oil prices lower, or we could have another supply cut from the BRICS countries, or something could come out of BRICS right now that sends oil the other way. But in the meantime, we're going to be range bound between the 50-day moving average and this resistance line right here until this story breaks one way or another. I still don't know which way oil is going. There's major forces at play with global demand destruction, but tightening supplies, and I don't know which one of those forces is going to prevail. Price movement is the result of the net forces acting on a commodity, and I don't know which one of those forces is greater. But let's talk about this one in CNN this morning. China's Xi unexpectedly skipped a key BRICS event, and no one is saying why. It's kind of an important thing. You'd think they'd say, oh, I'm sorry, my schedule wouldn't allow it, or this or that, or who knows, I'm not feeling well. Nope, nothing, just silence. He just sent the commerce minister. Chinese leader Xi Jinping on Tuesday unexpectedly skipped a business forum of the BRICS Economic Group in South Africa, sending his commerce minister instead to deliver a fiery speech in his name that decried U.S. hegemony, as of course Xi Jinping often does. Xi, who arrived in Johannesburg on Monday for the annual BRICS Summit of major emerging countries, was scheduled to deliver a speech at its business forum on Tuesday, alongside leaders from India, Brazil, and South Africa, but the Chinese leader failed to show up at the event with no official announcement or explanation from Xi Jinping. Instead, his prepared statement, peppered with thinly veiled swipes at the United States that have become a fixture of Xi's international speeches, was delivered by Chinese Commerce Minister Wang Wentao. We're going to skip over the statements. Yeah, we get what he says. Xi Jinping doesn't like America. Nothing new there. After skipping the forum, Xi later attended a dinner hosted by Ramaphosa, along with leaders of Brazil and India and Russia's foreign minister. So again, that's important details. Xi is in Johannesburg. He is at the summit. He just missed this one event, and he's not saying why. It's a big deal. Xi's surprise absence from the forum, noted by journalists at the event, raised questions among long-term observers of China's foreign policy. It's extremely unusual for a Chinese leader to show up in a country hosting a multilateral meeting, especially one that China is deeply invested in like BRICS, and then fail to show up at the opening event. That's from Bonnie Glaser, managing director of the German Marshall Fund's Indo-Pacific program. So we got nothing but speculation now as to why. And again, I am just looking forward to your comments. What do you guys think kept Xi Jinping from this meeting? Comments are always entertaining on this channel. I love hearing from you guys. Let me know down below what you think Xi was doing that was more important than the BRICS Summit. Now let's talk about a little bit of real estate right now, because existing home sales in the United States dropped 2.2% from a month earlier to a seasonally adjusted rate of 4.07 million units in July. That's the lowest level since January and below expectations of 4.15 million. Higher interest rates freezing the mortgage market, freezing the housing market. Everybody refied, locked in those lower rates in 2020, 2021, and nobody is moving. I'm hearing that people are trapped in their mortgage, which being trapped in a 2.5% mortgage is a great place to be trapped. But nobody is willing to sell. Nobody wants to move because they got no place else to go. If you sell your house, you have to take out a new mortgage at a much higher interest rate. And look at how these sales, they just keep going down. We got this big bounce in February, but now we've given all that up. And guys, if you zoom way out, let's look at a 25-year chart. Look at how low we are on these existing home sales. Look, GFC levels, guys. We're down. The number of houses trading hands down where they were in 2008 and 2009. Now, very important detail here. Prices are still going up in a lot of markets. And I even want to mention here on the cost front, the median existing home sales price rose 1.9% from a year ago to $406,700. It's the fourth time it has topped $400,000. So even though there's just no transactions, prices have still crept up a very little bit. So a housing crash? 'Tis not. This is not a housing crash. Not yet. I've been saying for a while, the missing ingredient in a housing crash is unemployment, and we still haven't had that spike in unemployment, even though the jobs market is nowhere near as strong as those in the press and those in government would have you believe. And why are existing sales declining like this? Well, mortgage rates. The average contract interest rate for a 30-year mortgage for conforming loan balances, that's $726,000 or less in the U.S., increased by 15 basis points to 7.31% in the week ending August 18th. Look at these mortgage rates, guys. 7.3% on the rise, continuing to rise, rising faster. Watch that 10-year yield as it keeps moving higher. It's taking mortgages with it. And I just want to zoom out again, a 25-year chart of mortgage rates. Look at that spike in mortgage rates. There's no way a change this rapid, this violent, is not going to cause some kind of major market event, dislocation, something. Right now, everybody's holding in place. Everybody's frozen solid. It's that quiet moment in the horror movie right before something terrible happens. Or it could be one of the cheap scares and it's a no, never mind, and home prices just resume higher. There's a lot of people who've been saying that, and they've been right so far. Not a lot. There's a few people, a few very intelligent people, I might add, who have been saying home prices are going to keep going higher. And let's be honest, so far they've been right. I haven't been saying that. They have, and they've been right. So it's important to keep that in mind. Look at the last time mortgage rates were this high, guys. 2000. Not since the turn of the century have mortgage rates been this high. Take from that what you will. Now let's talk about the AI elephant, the artificially intelligent elephant in the room. Nvidia earnings after the close today. Hold on to your butts, guys. Market's going to move big one way or another. Nvidia earnings are a high-stakes event for AI-crazed markets. Commentary on AI will set the tone for the broader stock market. Analysts say chipmaker is still cheap. Yeah, right. After tripling this year. How are they going to say a stock that trades at 240 times earnings is cheap? Let's move on, shall we? Big tech earnings season is wrapping up with a bang. Nvidia, at the center of the artificial intelligence frenzy, is reporting results that could set the tone for global stock markets for the rest of the year. The chipmaker has added more than $370 billion in market value since its last update and is the biggest contributor to the NASDAQ 100's 36% rally this year. Nvidia's processors are the picks and shovels of the AI gold rush that has fueled markets this year, making its report much more significant than a typical earnings release. What Nvidia says about guidance for the remainder of fiscal year 24 drives the sentiment around the entire AI thesis that has driven the market. That's according to Ben Reitzes, an analyst at Melius Research. Now, I also want to mention this, guys. With expectations so high, a disappointment would hit hard. If they miss, the entire stock market's going to go down. That's according to Adam Parker, founder at Trivariate Research, that he said in an interview. There's no question about that, and I wholeheartedly agree with that. If Nvidia misses, this market is in a bad way. This market is effed if Nvidia misses. Even if Nvidia beats, if Nvidia only beats by a little bit, this market might go down. Nvidia has to be perfect in order to keep this rally going. One wild card is supply. Some on Wall Street are warning that sales might be limited by Nvidia's ability to secure enough chips from Taiwan Semiconductor. And that's the second mention in 2 days about worries about supply with Nvidia. I wonder if somebody knows something that we don't. Well, we'll find out this afternoon when Nvidia reports. It's going to be big one way or another. Let's talk about a couple other ones that reported today. Peloton stock sinks as subscribers fall and recall costs exceed expectations. I'm not going to get too much into the weeds here, guys. But Peloton, it's a rising interest rate environment, and they've got a big mountain of debt, and Peloton has no earnings. Peloton has no growth, which means Peloton has no future. This company is a zombie. They're a relic of the pandemic boom. Stock right now is down 28.5% pre-market. Things are not looking good. People are traveling now. They're getting out of their house. They had this big recall. Their seats were breaking on this, $5,000 exercise bike, and the seat falls off. So they issued recalls, and they found that while people were waiting for their new seat to arrive, they didn't want to pay for the membership, and who can blame them? And now that the new seat is here, they're not signing back up. So Peloton lost a lot of subscribers. This business model just doesn't work. An overpriced piece of exercise equipment that you charge people a monthly fee to use in their house, it just doesn't make sense. It's a lousy business model. This is emblematic of the nonsense of the COVID stock market boom, and I don't think this company is going to be around much longer. Now, on a shinier note, something I've been forcing myself to do is to embrace the possibility of upside. It's a personal growth story, really. I'm trying to be bullish. I'm forcing myself to be bullish. Well, this is a bullish story, and I don't really have an answer for what's going on here. Abercrombie and Fitch lifts sales forecast as fresh clothing styles draw shoppers. Everything I've read says that retail is screwed and that apparel is not doing well. And here comes Abercrombie and Fitch having a great quarter. Abercrombie and Fitch raised its forecast for annual sales on Wednesday, betting that newer styles at its Abercrombie label and improved assortment at Hollister would pull more shoppers in, even as consumer spending remains pressured in the U.S. Shares of the Ohio-based company jumped 17% in pre-market trading after it also topped market expectations for second quarter sales. Abercrombie's been filling its shelves with a fresh collection of styles, including more dressy apparel and cargo pants. Oh boy, cargo pants making a comeback, while also capitalizing on the demand for wide-legged or cleaner look denim bottoms as jeans become a post-pandemic workwear wardrobe staple. And guys, blue jeans are not business casual, for those who are wondering. Abercrombie stock this morning, check it out, up 17.5% pre-market. Look, guys, apparel doing well. I guess this is a stock picker's market then when it comes to retail, because most retailers have not been doing very well despite all the hoopla about the strong and resilient U.S. consumer. So this one, file this under the bullish category. Abercrombie & Fitch having a good day. And, on the same token here, check this one out. Johnson Red Book Index came out yesterday, up 2.9% for the week ending August 19th. Inexplicable, guys. I cannot explain it. I don't know what's going on with the Johnson Red Book Index here. Look at this big jump. We had 3 consecutive weeks of negative same-store sales. That's what the Johnson Red Book Index is. And, that was the deflation story. That was the consumer strapped with credit card debt and the cost of inflation squeezing everybody. But for 4 weeks now, we've been ticking up on the Johnson Red Book Index. And then all of a sudden, wham, 2.9%. Big uptick in this latest reading. Now, I want to zoom out a little bit. All right, here's a 5-year chart of the Johnson Red Book Index going back to 2020. Here's this big jump that we just saw. We've seen this before. One here, a few here. So maybe this is just another one of those dead cat bounces on the way down. But it's worth keeping an eye on, guys. A sudden jump in same-store sales for the week of ending, August 18th, August 19th. That's an important one. Keep an eye on that one, guys. So that is your bullish morsel for the day. And I got a couple of guys I got to say my thank yous to this morning. Thank you, Mr. Steve Woitis. Says, congrats on 40,000 subscribers. Oh, thank you so much, Steve. And thank you, all 40,000 of you wonderful, magnificent melon heads out there. Thank you for getting my channel to 40,000 subscribers. I appreciate that very much. We actually, moments before we hit that live button, we broke 40,000. It's a very big milestone for this channel. Thank you all for getting us to this number here. And please stay with us. We're onward and upward to 50, to 100. I'm going to have that silver plaque over my shoulder here one of these days. Thank you, Steve, for being with us since the beginning and for the super chat and the support of the channel, sir. I appreciate that very much. And M&J says, way to go on 40,000 subs. Whoop, whoop. Thank you very much, M&J. Thank you for your services as the Blue Wrench, as the moderator, for keeping things neat and tidy in the chat, and for everything you do for the channel. I appreciate that very much, M&J. Thank you, guys, all of you. I really appreciate it. And I just got to say thank you to my Patreon supporters. You guys are awesome. Looking forward to talking to you today at 1 p.m. Eastern Time for our weekly get-together on Zoom. There's a link down below in the description. It's right underneath that link to the Silver Symposium. Don't forget to get your tickets at Caesars Palace in Las Vegas. We're just about 39 days away from the Silver Symposium. Fantastic event. All your favorite YouTubers are going to be there, including yours truly. Use that link, get 10% off your tickets. And until next time, hi, Mom, hi, Dad. I love you guys. Live small and dream big.